Hello and good evening. Welcome to Reinvest 24 webinar. My name is Tanel and today I'm going to talk about long-term potential of Baltic real estate market. So we're going to look into mainly Estonia, Tallinn, since all of our real estate projects are from that region at this stage. But we're already looking and taking steps to add a property from some other areas. The aim for Reinvest 24 platform is to offer rental properties from all over the world in the future. So we're already making steps for that. But since Baltics is a great place to start off, and we're going to talk today about what opportunities do we see, and let's get on to it. First of all, I want to start with this quote: 90% of all millionaires became so through owning real estate. So owning real estate, this is the capital growth part that I feel that doesn't get the attention that it deserves. People who bought homes in 70s or in 80s and just hold on to it. The net worth of these homes can be valued over $1 million right now in some fast developing areas in Europe as well as USA. So the most wealth is generated by the real estate, and rental yield. Basically, real estate is just an asset, and the rental yield is generated by this asset. So real estate is an asset that generates cash flow, but the asset itself is actually increasing over time. We've been seeing this in various markets, and since it is a very high demand asset, people need to live somewhere. People need to have their business offices somewhere. So that's the reason behind the real estate prices growing over time. At this stage, rental yield is just one of the income sources for real estate investors. The capital growth is the second one, and that's same in the Reinvest 24 platform. The project that we list there, they are rental properties. The investors will get monthly rental yield from them, but they also benefit from the increasing value of the real estate. So that's very important, and that's something I want to talk about today. We actually have some articles in our blog about this topic as well, and I recommend to look into it. So we're going to start off looking into some statistics of the economy to understand the market better. The best indicator to understand the economic growth in Baltics is to look into the average salaries. So as you can see from this graph, the salaries in the capital cities of Baltics, Tallinn, Riga, and Vilnius, have pretty rapidly been increasing in the past 12 years. In Tallinn, for example, the average salary has almost tripled in the past 12 years. And that's definitely a good indicator for economy, for also the purchasing power that the locals have here now, and that's also increasing the demand for real estate, of course. The increasing salaries also means growing population, since there are a lot of people coming to Tallinn, for example, from countrysides or even abroad to work here. And then the higher salaries are the reason for that. So it's definitely a good indicator and shows that the market is growing pretty rapidly. Another thing I want to talk about is investment raised by Baltic startups, especially Estonian startups. It's been a record-breaking years over and over again. Startups like TransferWise, Pipedrive, Taxify, they've been receiving huge investments and a lot of attention from worldwide VCs and investors. And these companies are expected to show fast growth. That means expanding the office space, importing the specialist workforce from abroad. And these high income individuals need to live somewhere as well. So that's also one of the factors for increasing the demand for rental properties. And it's overall a great boost to the economy of this region. So next up, let's look into the purchasing power. First off, we're going to look one of the indicators, the Baltic Housing Affordability Index from Swedbank Market Research. So the Housing Affordability Index basically means the prices and the cost of living relative to the housing income, how much the people can afford. And as you can see from this graph, it's been continuously increasing. And that's definitely a good thing. It shows that the Baltic economy is well alive and still developing, and there is no signs of the gold rush. So the market is very well balanced, I would say, and the growth has been very healthy. Next up, there is the apartment prices relative to the net wages. So we can see from here that after the 2009-2010 crisis, the ratio has been pretty much the same. So it hasn't been growing. That means that even though the prices of real estate have been growing in the past 8 years, so are the salaries, and so is the economy and the whole environment here. People actually can afford real estate today more than ever. So real estate, even with the higher prices than, let's say, 10 years back, the people actually can afford to buy them because there is the purchasing power now for that. So balance between people income and real estate prices confirms that growth has been healthy and rather balanced. So next up, we're going to look into the real estate prices and the rental yield in this region. We're going to look into Tallinn real estate average square meter price. So from here, we can see that since 2003 until 2007, there was quite rapid growth. One of the reasons behind that was that the big Swedish banks came into Estonia with their huge credit capacity and started offering home loans. So people who were in Estonia before that, they couldn't really get a bank loan to buy a home. It was basically impossible. But that event aggregated the market bubble, and the prices reached pretty high in 2007. From there, we had pretty sharp correction. So the prices dropped around 50%. Even in some areas, the drop was around like 60%. It was pretty sharp correction that followed to this bubble. But at the same time, at the same time in 2009, the rental prices dropped actually around 20%, max 30%. So that means that the rental properties still generated the cash flow even when the crisis hit the market. Since the banks weren't giving out loans so easily anymore, but people still need to live somewhere. So people, instead of buying properties, were rather renting them. And the demand for rental properties was still quite high. So the rental properties still generated monthly cash flow for their owners. And as we can see over the time, the market has recovered. In the past 8 years, the market has been growing. End of 2017, we passed the previous all-time high price. But if we compare the salaries in these two periods, And we can see that also the salaries, while the prices are same as they are in 2007, the salaries have doubled, if not tripled, in this period. So that shows that the market is nowhere near the bubble effect or the gold rush effect, but rather growing organically, depending on the demand and the purchasing power of the market. And even if we take this 15-year period, that includes the huge correction that we had, the average capital growth for real estate owners has still been around 9% per year. So especially the rental properties, they still generate you the monthly income, and over the long-term period, the capital growth is also very attractive. Now, if we talk about the rental yield, we're going to look into some statistics from Global Property Guide, and Estonia is listed among the top countries in Europe for the rental yield, the returns from the capital invested into real estate. If we look at the top three, Moldova, Ukraine, and Montenegro, they don't have euro as their currency, so there is the currency risk as well. For example, you can earn in Ukraine, let's say 9% yield, but have the Ukraine hryvnia, the local currency, decreasing in price 20%, so your return will be minus 11% in this period. So there's another risk. So if we look just the Euro countries, then Estonia is listed among the top countries. And that definitely shows that there are a lot of good opportunities in this market. And especially if you know the market and if you have some experience, there are many profitable rental real estate properties that you can find from this market. And that's what the Reinvest 24 team is doing. So we talked about the rental yield, rental demand not decreasing as much as the prices were increasing in the last correction, last crisis. From here, you can see that the commercial real estate, the rental yield was actually growing in 2009. Not as much as residential areas, since many businesses, they were shut down or they needed to move into a smaller spaces. So the demand was definitely a little bit decreasing. But at the same time, some of the companies, they sold their real estate to free some capital for the operating cost, and they rather rent. So some part of the demand came from there. But as we can see from the residential real estate, the rental yield increase in 2009 was pretty rapid. It almost doubled. And that definitely shows that the demand will stay there, even if the times are bad, and in long term, the market will always recover. So yeah, especially for the residential real estate. Now I want to compare a very established market with Estonian market. Since Estonia has been independent, the whole Baltic has been independent for less than 30 years. So there is the market is still in very early stage. And I would like to look into some similarities and some of the comparisons between some established markets and Estonian market, just to put things in perspective and show the idea of where the market is at this stage and how much room there is for growth for the next 10, 20 years. So here we have Swedish residential property prices, the index. We can see that the late 80s, when the banks were offering home loans pretty aggressively, there was a kind of like a price bubble. And that is similar to the one that we had in Estonia in the 2000s. So we are a little bit behind if we look at the state of the market, but the markets have some similarities. And if you look at this period here and compare it to this this graph here, the Estonian market, it's pretty similar. It took around 10 years after the sharp correction to get the prices to the all-time high in Sweden. And many people were thinking and saying in 2002 that the next correction, the next crisis will hit them now. And probably some people still waiting the correction to happen. But what has actually happened is that the real estate prices in Sweden have basically tripled in this 15-year period. So the similar thing is happening in Estonia right now. If we look at the price graph, then we have surpassed the previous all-time highs. Some people think that the prices are high. Some people say that there is going to be a correction. But if we look at some other established market, for example, like UK housing market, they had a similar thing happen to them in the late 80s, early 90s. And from there on, the prices have almost continuously raising over the past 15 years, and at least tripled in this period. So this just shows how early stage it is in Baltic real estate market, and how much room there is for growth, how much potential there is for growth, especially when talking about the capital growth that all our investors benefit from. Now we're going to also talk about the efforts that the Reinvest24 team does for the capital growth. We don't just sit around and wait for the market to grow. We're actually working on daily basis and putting down effort to secure capital growth for our investors. First, it all starts already when we're choosing the project, the property for listing on the platform. We're looking at fast developing areas where the city is developing new infrastructures. There are big developments nearby, and of course the buying price is very important for us. If we get the property 10% under the market value, then we have secured already for our investors 10% capital growth from the day one. So this is definitely something that we're working hard for. And the other thing is the developing and renovating the property. Basically, before listing any property on the platform, we're looking into different opportunities. If there's a possibility to renovate the building together with the co-op, that's going to increase the value. If there's some interior finishes that we can do, or licenses, some legal work, all these actions will increase the property value and provide capital growth for our investors. As an example, what I mean by that, I'm going to talk about the rental apartments in Tallinn's Tech Hub. It's an open project on the platform. At the moment, you can go and check it out. You can invest into it. So first of all, the property involves some developments. So we're renovating the building together with the co-op. We're going to finish the construction works inside with the interior finishings and the designs. And we got this property with way lower than the market prices. And once the construction works are done, they're already ongoing. They're going to be finished in May, so 4 or 5 months from here. This will increase the value of this property. We estimate around 20%. So just in 5-month period, we have secured for our investors 20% growth through the capital. After the property is ready and we have finished all the constructions, we're going to rent it out day by day to Airbnb and booking.com. The location is excellent for stopovers since the airport is just 10 minutes away. The central bus station is 10 minutes away. The Rail Baltic stop is just across the street. And the whole area is going to become part of the Tallinn city center in the near future. There was just 2 months ago, the biggest shopping mall in Baltics opened its doors just across the street from this property. So yeah, that's another thing that we look into. And the capital growth after the developments are done, we estimate it will be around 6% per year. But this is rather conservative number. But we're trying to under-promise and over-deliver, and that's why we choose rather conservative numbers, as well as the rental yield. 8% per year is the average. But in the summertime, when we have the high season, it's definitely going to be over 10% per year. Might be even around 12 to 13% per year. But on the low season, it's going to be around maybe 6, 7. So long term, around 8. So it's definitely a good investment opportunity. There is the capital growth, there is the development, and the monthly cash flow that it generates. So check it up from our website, and if you have any questions, feel free to email me about them. Tanel@reinvest24.com. Now we're going to look at different scenarios if you're investing in Reinvest24 platform and you're disciplined to save every month some amount, and you don't want to keep it on your bank account since you don't get anything from there, and the inflation is eating up the value of your money. Then investing it to real estate is a really, really good idea. And we're going to look at different scenarios. First of all, let's say we're going to save 500 euros every month, and we're going to invest it into real estate, a similar project that I just showed you as an example. Period will be 10 years. So the total investment over this period will be 60,000 euros. Plus, we're going to reinvest the rental yields every month. The properties, all of our properties will get revalued once a year. So that generates the market growth, 6% that we're going to add once a year, and net rental yield 8% we're going to add every month in this calculation. So 14% combined. So this is how the portfolio will grow. The estimated results: real estate portfolio valued at 157,000 euros that generates passive income per month 1,050 euro. And the capital growth expected from this portfolio would be around 9,500 euros per year. So it's definitely going to, the capital growth is definitely going to help against the inflation, the decreasing value of your money. So it's definitely a better idea to put your monthly savings into real estate rather than just in a savings account where you don't get much back. But let's say we have more ambitions and we want our portfolio to grow to 1 million euros. How long will it take? It's actually going to take only an additional 12 years. So the whole period will be 22 years to reach the 1 million. The terms for investing will be the same. We're going to invest every month 500 euros. We're going to reinvest rental yields, and the results will be the real estate portfolio worth or valued at 1 million euros. that generates monthly income 6,650 euros per month. That's a pretty good income for your retirement. Definitely could be traveling around the world and enjoying the life even in the retirement. And the capital growth that this portfolio produces would be around 60,000 euros per year. So it isn't that far. It is possible to make it, and I hope many of you will reach this goal. To see more about these calculations I made here and see different scenarios, again, please go check out our blog post about it. Where does investing 100 euros per month get you, and how to become a millionaire? So we write about different scenarios and we explain all the calculations and everything there. So please go and check it out. And write down your goals and get into it. So this was today's webinar about the potential of the capital growth. I hope you got some information out of it and have a better understanding of the real estate market in Baltics and the potential that it has, and how the team is working to secure the profits for our investors. If you have any questions, you're welcome to send them on my email, tanel@reinvest24.com. I will personally answer all of them, and all the questions are welcomed. So thank you for staying with us, and have a nice evening.